Welcome to the Real Estate Niche Show, a show that focuses on top real estate professionals who specialize in different niches of real estate. My name is Ben Kogut. Join me as we dive deep into the professional and personal lives of the experts of the real estate industry. Welcome to the Real Estate Niche Show. I'm your host, Ben Kogut, and today I have Tyler Lyons on the show. Tyler is an active real estate professional and the director of investments at ASYM Capital, where he helps investors to invest passively in commercial real estate alongside world-class real estate operators. At ASYM Capital, Tyler is responsible for investor relations, which is what I do at HJH, by the way, fund management, and due diligence for new investment opportunities. Tyler also has extensive experience investing passively in private placements, covering many different asset types, including multifamily, senior living, and some other non-real estate alternative assets. Tyler is a CPA. Tyler, welcome to the show. Thank you so much. Is there anything in your bio that I missed that you'd like to share?
Ben, that's nice to be here. I think that nails it. And it's a pleasure to be here. I'm excited to talk to you and your audience. And it's been nice to get to know you the last few months here. We got to run into each other in Austin a few months ago. So that was really cool, and happy to be on the show.
Awesome. Well, I agree and looking forward to connecting more. So let's dive into it. What is your real estate niche now? And tell us how you got into it.
Sounds good. So I'm currently, like you mentioned in the bio, I'm the director of investments at ASYM Capital. And ASYM Capital was founded several years ago by my business partner, Hunter Thompson. And when the firm was initially founded, it was founded on the concept of investing in non-correlated or counter-cyclical real estate assets. So the firm was founded wanting to invest in real estate assets that do good no matter what's going on in the broader economy. You know, if the economy is going into a downturn or the economy is doing well, that's where we want to invest, and that's how the firm was founded. And as we've evolved, we've gotten a little bit more opportunistic in terms of where we participate, but at our ethos will always be, you know, solid cash flow investing. That's what we like to do. And more specifically on our niche, so we've invested in several different asset types over the years. Started out investing in workforce housing and self-storage. And more recently, we've also invested in senior living, ATM machines, and a few other different assets as well. And in terms of where we participate, our entity and our firm, we're not really a GP entity. And for your audience, when I say GP, I mean general partner. We're not necessarily a deal sponsor in deals. What we do as a firm is we really look at the landscape of what's going on in the world, what's going on in the broader economy, and we try to identify specifically where we want to participate in the world of real estate. And once we find what we believe to be the most compelling real estate opportunities or real estate theses that might be available in the market, we then go out and try to find really good operators in those specific niches so that we can partner with them and bring our investors and our capital to their particular deals.
Got it. Well, thank you. That was super articulate. Let me see if I can reply back, because I want to make sure I got this right, because it's similar but different from what I do at HJH. You guys are focused on looking for assets or cash flowing investment opportunities. It may or may not be real estate, but most of the time it sounds like it is real estate opportunities. Correct. And you are focused. Do you guys do the underwriting not only on the asset but also on the GP as well? So basically, probably every part of that piece of the puzzle. And then you have relationships with hundreds, if not thousands, of investors, and you are sort of the vessel to bring investor dollars to investment opportunities that you deem reasonable and fit, that you're basically vouching for on behalf of your investors, more or less.
Yeah, you said that very, very well, maybe even more articulately than I did. I think you absolutely nailed that there. And you're correct too on the due diligence process. We're really doing due diligence on the deal sponsor. We're doing due diligence on the specific deal. So when it comes to the underwriting side of it, it's not necessarily our team putting together the deal model and the financial analysis. Typically, the way that it works is the deal sponsor will have a particular deal that they have under contract, they feel really, really good about it, and they go out to the market and they want to raise capital for their particular deal. And a lot of times what we see with the GPs, there are some that have a really good marketing machine and they have no problems raising the capital they need to get the deals across the finish line. But you have other operators who maybe aren't quite as good at the marketing side of it, or they may just have so much deal flow that their capital raising capability maybe just hasn't quite caught up with their deal flow yet. So there are operators out there that need a little bit of help with raising capital, and that's where we come in. And in terms of the underwriting, the deal sponsor, like I said, gets the deal under contract. They will put together the business plan, the financial analysis, and the deal model that really kind of spells out what the returns are going to look like, calculates the waterfall, all that stuff. And for our process, what we do from an underwriting standpoint is we come in and we review the business plan in detail with the deal sponsor, and we pretty much audit their financial analysis, and we really kind of get into the details there. We do background checks on the deal sponsors. We go and actually visit the physical property and take a look at it for ourselves. You know, one of the things that we bring to the table as a value add for our investors is that, you know, since we're coming to a deal, typically with, you know, call it $2 to $5 million per deal, we get a lot of airtime with the GP and with the deal sponsor to do due diligence and to review the investment opportunity. Whereas if you're an individual investor who's bringing, you know, maybe $50,000 or $100,000 to a deal, you definitely need to do your homework. But honestly, you're probably only going to get a couple hours of the deal sponsor's time. Whereas with us, since we're bringing a big chunk of capital, you know, it's very open book. You know, most of the time we'll actually go and spend time with the GP at their corporate offices and, you know, talk and interact with their staff. We get a lot of time to do that due diligence process for the investment opportunities that we pursue.
Love that. Yeah, I love that. You guys are truly adding value for investors, people that may or may not have the expertise, may or may not have the time or the desire to actually dig in and do all that due diligence, which I know can be very cumbersome. And so I get it. And I think that's a wonderful opportunity, especially in today's market. Well, maybe I'll put it in the form of a question, like, how are you guys finding deals, given that, I mean, I think it's pretty obvious that it's a very, you know, competitive market that we're in. We're at the beginning of 2022 right now. And from what I'm seeing, and I think you guys are as well, there's a lot more investor dollars looking for deals than there are deals looking for dollars. How would you respond to that? What do you think about that?
Yeah, it's a great point. The market is exceptionally competitive right now, and there are a lot of mediocre deals out there for sure. There's a ton of dollars looking for yield right now. If you track the macro side of things, I mean, it's no secret that the money supply has increased 40% over the last 2 years. If you look at commercial real estate in the United States, in my opinion, it continues to be one of the best risk-adjusted return opportunities in the world in terms of investments. So yeah, there's a lot of money chasing yield right now. And if you look at commercial real estate, it continues to get incrementally each year a little bit more and more institutionalized. You have big money, you have large family offices, you have pension funds, you have big money that continues to come into real estate in a bigger and bigger way. So yeah, you're seeing cap rates compress, you're seeing prices go up, and like I mentioned at the beginning here, a lot of mediocre deals out there, and I do think that investors need to be very, very careful. So in terms of our deal sourcing process, the way we source deals, it's essentially indirectly through the deal sponsor. So we have some long-standing relationships with some really good operators in certain niches that we plan to do repeat business with. And then we have other newer niches that we're exploring, that we're in the process of building relationships with operators in those particular niches. So for us, it's really a matter of, you know, building that relationship with the operator and then taking a look at their deal flow to see what it looks like. And based on the deals that they're getting under contract, you know, we get to look at them and see if it's something that kind of fits our criteria. But to your point, yeah, we're definitely at a stage in the market where investors need to be very, very careful. You know, just kind of continuing the thread on the macro side of things, you look at The Federal Reserve right now is talking about increasing interest rates a few times this year. And as your listeners may know, that can usually cause asset values to decrease. And when debt service goes up, it's harder to cash flow. So it's definitely something that investors need to be paying attention to, and investors need to be more careful and more discerning than ever when choosing investment opportunities in this market right now.
Amen to that. I like to tell people to, look at, tens, if not hundreds of deals before, pulling the trigger and jumping into something. And so I think the way that you guys are bringing such a wide variety of opportunities, both real estate and non-real estate, I think that's a really, really smart business model. And I have people often call me and say, "Hey, Ben, how do you raise capital, or how did you get into raising capital?" Like, I have a lot of relationships with friends. Like, I'd love to kind of bring my friends together and go out and invest together in a deal. And so I'd like to touch on that and kind of take a step back on your story, Tyler, and learn more about how did you break into this industry?
So I began investing in real estate several years ago. I had a pretty solid W-2 job, and I got a promotion at work, started saving up some cash, and it was really kind of as simple as, you know what, if I could buy an investment property and have somebody pay the mortgage down for me, hey, that's going to create equity for me, right? I can build wealth that way. And as I started jumping down the rabbit hole, it's like, wow, when you invest in real estate, it shouldn't be just covering your costs and paying down principal. You can actually have an opportunity to get some really solid cash flow on top of that. And then the next realization was, wow, if I can assemble a portfolio of these properties that create cash flow, maybe someday I can retire from the day job and, kind of do whatever I want. And that became really interesting and really attractive. So I started really, really small in the industry, bought a duplex about 5 minutes away from my house here in my backyard in Grand Rapids, Michigan to start out, and definitely faced some trials and tribulations on that first project. But once that project was completed and refinanced and fully leased up, and I started getting that cash flow just rolling into the bank account every month, it was very fun and very addicting too. I wanted to continue to do it. So I started to I rinsed and repeated and did that for a few years and built up a residential portfolio here in West Michigan. And after that, I started to realize, okay, I really like this business. I want to participate in a bigger way, but I could see the writing on the wall that what I was doing currently just wasn't very scalable. So then I started exploring the world of private placements, and commercial real estate was the next step in my evolution. And not long after that, I became an accredited investor as well, because the day job was going pretty good. So, I started going to commercial real estate conferences. I started investing in private placements. And then I started to think about, well, maybe I should start my own syndication firm. And so I started to explore that idea. And I also entered a mentorship program to do that, which ended up being, in hindsight, a really huge, a big deal for my career as a real estate investor. It really pushed me along. And that mentorship opportunity, the mentorship program I entered was the Cash Flow Connections mentorship program, which is put on by Hunter Thompson of ASYM Capital. And long story short, I entered the mentorship program, and I had no idea that a potential outcome of that program would be becoming a partner at ASYM Capital. But it just so happened that as Hunter and I got to know each other and our relationship grew, it became apparent that what he needed in his business to take ASYM Capital to the next level was somebody like me who, I knew my way around a PPM. I'd invested passively by then, so I knew the commercial real estate landscape pretty well. But with my background in in corporate finance as well, that's really a skill set that he needed to counterbalance his skills, which are really around marketing and getting the message out there. He's super strong in that area. So that's kind of how I went from, a CPA and a corporate finance professional full circle to working in commercial real estate full time now. And it's been a blast. It's been a blessing, and I definitely feel like I found my calling. So really, really enjoying it so far.
Love that. I'd like to dive in a little bit more, because I know that Hunter has really been a pioneer with these mentorship programs. So I'm just curious, what can you share about some of the major lessons that you've learned in the Cash Flow Connections or any of the other mentorship programs that you've been involved in?
One of the things that really sticks out to me is that all of us are really only one relationship away from completely changing our horizon on what we can do in our business. And for me, that relationship was with Hunter. And that was something that's been completely life changing for me. And it's completely changed the trajectory of my career. So when you're thinking about, hey, do I really want to join that mentorship program? Do I really want to go to that commercial real estate conference in a couple of weeks? Do I really want to invest my personal time to do these things? Just know that a lot of times it's not going to be the tactical knowledge that you learn from these mentorship programs or from these masterminds or from these conferences that you go to. A lot of times it's the relationships. And I can't say enough that you're literally one, maybe two relationships away of completely changing your life.
Yeah, I totally agree. My story is kind of close to similar to yours, quasi, but the main overlap is that I started investing with HJH with my partner Corey, and he basically eventually made me an offer I couldn't refuse to join the company as a partner, and agreed. Like, the relationship I have with Corey has definitely changed the trajectory of my life and my career, and now I'm having the most fun I've ever had, and here we are at a podcast. So. That's awesome. Well, congrats on that, and shout out again to Hunter. I know that he's just doing a fantastic job. Y'all are just teaching so many people about how to create this financial freedom, and so I think that's really wonderful. Going forward, to the extent that you can, can you talk about what do you see coming down the pipeline, or what trends are you seeing coming over the next 12-18 months?
Absolutely. Yeah. And we touched on this a little bit in the conversation, but for all the investors out there, I think it's really important to watch the macro side of things right now. We're really late in the market cycle right now. You have a situation where we've had some unprecedented financial things that have happened in the broader world the past, call it 18 to 24 months. And you have a Fed who is really between a rock and a hard place right now. You have a situation where you have inflation that's running really, really hot right now, right? CPI was 7%, 7.5% last month, and 7% the month before. So you have the Fed, who really is very incentivized to get inflation reined in, because now it's running at a point where the poor and the middle class and everyday Americans are really starting to see it. They're seeing it at the gas pump, they're seeing it at the grocery store. They're feeling that pinch, and people are starting to get upset about it. So you have a Fed who's very incentivized to get inflation reined in. And how do they do that? They crank up interest rates typically to try to do that. And they're between a rock and a hard place, because if they act too aggressively, they risk evaporating the 401ks of baby boomers who are set for retirement. But if they don't act aggressively enough, inflation could continue to persist, and things could be bad that way as well. So I think it's really important to watch the macro side right now for all the investors out there. It's interesting, the last time the Fed did try to take more of an aggressive fiscal policy position, you saw the market really threw a fit. This was back in like 2018 when they had the taper tantrum, they called it. When the Fed said they were going to taper, the market had a conniption, and the Fed turned around pretty quickly with more easy money policies. So whether or not that's going to be what happens this time, it remains to be seen, right? I tend to think that I wouldn't be surprised if the Fed tries to tighten, but then needs to go back to easy money policies to not, again, evaporate 401ks. But the one thing that's different now than it was versus 2018 is that inflation is so high. So everybody should really be paying attention to this right now. But I would say people shouldn't let them get that scared from investing in real estate, because as an investor, you always need to be asking yourself, compared to what? Right? It's like, okay, I can invest in real estate, or I can invest in the stock market, which if the Fed acts too aggressively or hastily, those valuations can disappear really quickly. So you got to ask yourself, compared to what? And I still believe that even in this late market cycle, real estate is a really safe place to be. I think it's important for investors to really just be careful and watch for certain things when you're investing. If you look back to 2008, when people really got hurt, a lot of times it was due to the debt piece. There were situations where a debt piece would balloon, and maybe a GP wasn't ready for that, and the debt came due, and there was nothing they could do. So For investors, just be careful to watch the debt. If you are investing in opportunities that have floating rate debt, make sure that you understand what the cap is on that floating rate debt. Like how high can that get before it caps out, and how might that impact the deal returns if interest rates do go up. And also, if fixed rate debt is something that could be pretty attractive right now too, it could really help you to head off some potential risks as well. So I'd say definitely watch the macro. And then in terms of what we ASYM Capital are seeing and what we're excited about, what we want to invest in, multifamily is something that we've invested in for many years, and we're still very bullish on the space, and we still believe massively in multifamily. If you look across the last decade plus, the United States has underdeveloped housing, right? It's we need more housing in the US. If you look at occupancy right now nationally for multifamily, it's approaching all-time highs. It's something crazy like 97 to 98%. And we need a massive amount of single family housing and multifamily so people have places to live. But at the same time, you've seen affordability for single family housing really get hurt. You've seen single housing pricing really go up a lot. So it's getting harder for people to afford housing. So from a high level perspective, multifamily is something that we still really believe in, still believe it's an amazing investment opportunity. And it's something that an area that we're definitely looking to partner with really good operators and allocate more capital to in 2022 and going forward.
Makes a lot of sense. Yeah, focus on those macros. There's definitely a lot to watch, and so that was an incredibly. I really appreciate that synopsis there. So thank you, Tyler. All right, let's pivot a little bit. And there's a few questions I'd love to ask everybody to know you on a little bit more personal level. And the first question is, personally or professionally, how do you like to invest in yourself?
Yeah, it's a good one. We all work hard in this industry, and it's important that we take some time for ourselves and invest in ourselves too, right? So one thing that I always commit, this is something that it's not as much of a monetary investment as it is more of a time investment, but I block out time every week to work out. For me, it's something that's just been part of my habit and part of my DNA for a very long time. And when I take care of my health, I just feel like I feel better, I think better, I perform better. For me, it's been one of the biggest life hacks I've found. I just feel like everything gets a little bit easier when my health is on point and when I'm working out and taking care of myself. So that's one way that I always invest in myself. And beyond that, also, so some of the more the typical things too, conferences, masterminds, that sort of stuff are things that I spend a decent amount of time and money on as well.
Nice. Agreed to both of those. And next question is, how do you like to invest in the community?
So I recently did some volunteer work for a local not-for-profit that basically helps to feed hungry children around West Michigan. They are a growing organization, and they needed some professional assistance with creating an investment policy because they're starting to grow. They're starting to get some cash rolling in the door now. So myself and a few other financial professionals from around the West Michigan area kind of put our heads together and helped to draft an investment policy for this particular organization. It's called Kids Food Basket. If you want to look it up, it's a great organization.
Yeah,
And
what's the link? We'll put it in the show notes.
I believe it's kidsfoodbasket.org, but I can definitely confirm that for you and make sure we get that right link in the show notes. But yeah, really good organization here in West Michigan that I support and would encourage you to as well if you feel so inclined to do so.
That's beautiful. Congrats on that. And how do you define the word success?
Many ways you can define success for sure, but for me, success is, doing something, having the ability to say no to anything that doesn't allow you to be your full self. I kind of felt like at certain times in my corporate career, in my W-2 career, maybe I just didn't really have full ability to just fully express myself and to be myself every day. And, now that I'm working in the world of real estate, one thing that my business partner and I really see eye to eye on is obviously what we do every day in and out to find investment opportunities, to help our investors make money and preserve their wealth. We're very aligned in terms of how we want to go about doing that, what we believe is the right way to do that. but just beyond even the business side of things too, just in the world, there's a lot of stuff that we see eye to eye on. And, because of how aligned we are, not only professionally, but personally, yeah, I feel I can kind of be my full self and just kind of let it rip. And that's really, really refreshing and really cool.
That is definitely a great way to define success. And yeah, you do you, brother. Absolutely, as you should. So as we're winding things down, there's a couple more questions. Number one, if someone wanted to get a hold of you, what would be the best way for them to do that?
Yeah, the best way to do that is you could email me at tyler@asymcapital.com, and that's ASYMcapital.com. I'm also fairly active on LinkedIn and Twitter as well. So you can just look up my name, Tyler Lyons, on LinkedIn. You should be able to find me that way. And we can include my Twitter handle, perhaps in the show notes here. I believe it's Tyler Lyons RE Cashflow, or Tyler RE Cashflow. I can't remember off the top of my head, but yeah, we'll get that in the show notes so you can follow along. I'd also encourage you to give the Cashflow Connections Real Estate Podcast a listen to. I started hosting a weekly spot on that particular show. It's called Topical Tuesdays, and each Tuesday I bring in a different subject matter expert, and we go super deep on whatever it is that they're really good at. And also, I wanted to plug one more thing, and this is late breaking news here for the listeners of the Real Estate Niche Show. I don't think we've announced this at all yet, so this is going to be hot off the press here for your show, Ben. But we're going to be doing a passive investor summit, a passive investor virtual summit, and it's called 100K to Invest. So basically, we're bringing on some of the best industry thought leaders that we know. And we're basically asking them the question, hey, listen, if you had 100K to invest right now, how would you invest that? And if you go to the URL 100ktoinvest.com, you can follow that URL. You can put your email in, and you can get on a list to be able to tune in for that. It's going to be awesome, and we're super duper excited for it.
I love that. What a great idea. There's going to be so much wisdom that comes out of that. I will definitely keep an eye out for 100ktoinvest.com. That's a super, super fun thing. Awesome. So as we're winding things down, are there any other words of wisdom that you could share with the audience?
Ben, I'd like to just thank you for bringing me on and giving me an opportunity to talk to your guests here today. I would say for anybody out there who's, we talk a lot at ASYM Capital, people who are passive investors, but also people who are aspiring entrepreneurs. And, one lesson that I've learned in terms of my personal career journey into real estate is that when it comes to real estate, one of the beauties about this industry is you don't need some sort of Ivy League credentials. Right? I've seen people from all walks of life come into this industry and just absolutely kill it. And one thing that I've seen that seems to be a very common thread is that persistence really pays in this industry. So if you can get punched in the mouth and keep coming back and stay hungry, persistence is one of those key traits that really pays off in this industry. And if you've got some smarts and you've got persistence and you really, really want it, there could be a future for you in this industry.
Love it. Great advice. Tried and true. Totally agree. Stay hungry. Stay thirsty.
That's right.
Commercial. All right. Well, ladies and gentlemen, Tyler Lyons, thank you again for being here. And until next time, stay hungry.
Thanks, Ben.
Thanks for listening to another episode of the Real Estate Niche Show. If you enjoyed this episode and you'd like to help support the podcast, please share it with others, post about it on social media, or leave a rating and review. To catch all the latest from me or the show, you can follow me on Instagram at Ben Kogut and at The Real Estate Niche Show. Thanks again, and I'll see you next time.